Well, hello and welcome to thank God it's Friday, Bloomberg Quint's weekly edition where we bring you a market expert. This time we're being joined by Porinju Veliyath, MD and Portfolio Manager at Equity Intelligence. Porinju, thank you so much for joining us and taking time out for us this Friday. My first question is, you're also calling yourself a value investor. My question to you is, do you not believe in growth investing? You're only looking for value stocks?
See, to be very frank, Shraddha, I do not find this kind of differentiation. These all are academic things. The professors and kind of people, they talk this kind of value investing, growth investing. Ultimately, what everybody is aspiring to do is value investing and create wealth. So growth is not coming under that. It's not a different style of investing. I don't believe so. Investing, it's all about stock picking, which I repeatedly talk about in the special context of Indian equities. Now, stock picking is the game. So that is what investors should look at. So whatever name you call by, value investing, growth investing, momentum investing, I think, in fact, if you don't have a very fixed pattern of trading or investing, that's always better. It can be, there may not be very hard and fast rules in investing.
Okay, Porinju, just a little curious, just a question that came to my mind. What is the average holding period of stocks in your portfolio? Just a general question.
This is, to be very frank, Shraddha, we haven't analyzed it exactly that way, the average holding period in each year. I can put it in a slightly different way. The last 5 years, when we analyzed our portfolio management scheme, 85% of the income has come from long-term capital gains, which are tax-free today. So that will give some idea about, the holding period, perhaps.
So, Puranju, I know that you have had a very, very positive view on the long-term markets, but I also want to know is that, what are the challenges, the next set of challenges that our Indian markets may face going forward?
You mean the general market as such?
Yes.
I have been very positive on equities in Indian markets, especially since the last maybe 4 or 5 years, since 2012-13, because I find deep values in many of the businesses, many of the companies listed in India. So that still continues, even though there is some decline in that multi-bagger potential stocks. The value picks are still there. The opportunity to pick value and create 30, 35, 40% kind of a CAGR in the coming years. When you look at from that point of view, Indian market is still is full of opportunities. I used to sometimes say, it's a paradise for stock picking. So that idea, it is based on fundamental factors of economy and the markets. It's not, I'm not a technical expert and I don't believe much in technicals. No, I always believe in stock picking and creating wealth, and value investing is just investing, It is not a very peculiar type of investing. That is what everybody likes to do, value investing.
But
And
Yes. No. I was just asking that you did speak about, the markets to a certain extent, having exposure to the economy and the way the economy is playing. So I also wanted to know is that what are the next set of triggers for the economy, internal or external, that could spur our markets even forward? Are there any factors that you're waiting for?
To be frank, Agam, we don't need next set of triggers for the markets to go up. See, the triggers have been happening in the last 2 years, basically due to a major shift in the style of political management of the economy. So that is the major trigger. That one trigger will lead our markets in the next 5 to 10 years' time. Because I used to talk, the Indian economy and the markets are at a historic inflection point. Basically because of the structure of the economy and the recent political management of the economy. This is a very important thing, and this is the real macro big picture on which investors can really bet on equities and make money. So there are all the symptoms. Now people are waiting for the numbers. Numbers may take time. So one of the triggers what you have in mind could be the numbers reported by some of the companies going forward next 1 year in maybe FY17, FY18, the numbers will start coming in many of the pockets of economy, many of these companies. So that could be a trigger if you're looking from a technical point of view. And another trigger which already in place is the foreign fund flows, the foreign investments coming to Indian equities. That I am very confident will continue to be there. And another trigger is the domestic investing, which I have been recently talking about. The Indian domestic investors, hardly anybody invests in equities. I'm telling you, whatever we have seen today, it's only a small fraction of the potential money which can be invested in equities. And next 2-3 years, I see a very, very high level of investing, more and more people investing in the Indian equities. So these are the technical triggers if you are talking about, the coming up triggers. And but just because money coming into the market, we can't be bullish on the markets because the fundamentals have to be there, the numbers have to be there. So the one good thing about Indian market today, all these factors are going together, the fundamental and technical factors. So I am looking for new level for the Nifty in the next 2-3 months time is what I am looking for, because markets have been in fact correcting. Indian markets have been correcting in the last 1 year. You might have seen, Shraddha, sector by sector, Indian markets have been corrected. It started with the metals and commodities. We had many stocks in the Nifty and Sensex. Then we had a pharmaceutical meltdown. Many of those companies, including Sun Pharma, from the peak, they all corrected very well. Then the latest, we have the IT companies, large IT companies. Wipro has closed to 1 year low today. Infosys at near to 1 year low. So sector by sector, Indian markets have been correcting in a healthy manner in the last 1 year. And I think it has been consolidating well, and it is poised for the new highs without much delay. This is my reading on the market.
Okay, so corrections are healthy and Nifty should see new highs in the next few months is what Porinju is saying. Okay, so a very optimistic view coming in from him. But Porinju, if you're really positive and optimistic on the markets, we need to understand that some of the broking firm industry is a direct beneficiary of the markets doing well. We've seen increased investor interest even as far as the primary market is concerned. We've seen oversubscription levels as far as most of the recent IPOs are concerned. So, are you also bullish on some of the broking firms in that industry, or in anything that you're picking up in that space?
I have talked about broking firms last year on many platforms, and you may be already seeing the kind of movement which has come in Motilal Oswal, IEFL, and many companies, so that is okay. But broking again is it's not a very interesting aspect of the business. Now it is another thing. Most of these companies, broking companies, they have diversified well within the sector. They do merchant banking, private equity, and fund management. So that's so basically the capital market activities. I am very bullish on that sector, as you rightly indicated. When the domestic buying increases in the market, there is a huge scope for these companies to make much better earnings and revenues going forward. So investors have to look at selective broking companies too, and some of them may be in the mid caps now, not in fancy. You have companies available at 100 crores, 150, 200 crores market cap. Well, decent, well-managed companies in the broking. I mean, basically in the capital market segment.
Porinju, I know that you said that you look at stocks from a bottom-up approach, but we do have a viewer question right now, and the viewer question is there any favorite sector right now which has taken your fancy?
That's I am not any sector fan, Agam. I am just I keep my eyes and ears open for opportunities for value investing. So sectors will come, sectors will go, companies will come and companies will go. So recently, this year I had a large exposure for pharmaceuticals. That's why I started the year with the Biocon at around 450, 500 levels, and so that was a very good performer. So even within the sector, you may see now pharmaceuticals. Some of the companies are year low, and some of them are at year high, near to the year high. So it shows that investors, especially small investors, need not be very excited about sector-wise investment. India, considering the structure of Indian economy and markets, you have so much variety of industries and segments, and so many number of companies, and small, medium, and large cap companies and mega cap companies. So there is no shortage of sectors and companies. Just be open. Just be open for any kind of ideas with margin of safety and with the proper valuation, with a reasonable valuation, with some kind of growth prospects, reasonably well managed company with a reasonably good balance sheet. There are many of these factors, and sometimes you may need to compromise on some of those aspects of the companies to find multi-baggers. That's my style of investing. I may not go for a perfect company. If somebody say, okay, the balance sheet is the best zero debt company, management is proven and highly ethical and perfect management, the business model is futuristic, everything is good, I will never buy that company. Because that company will be already in fancy, it will be fetching a very high premium, and it may be, I don't like to invest for another 10-20% from that levels. So we have companies like that, very, very high quality blue chip companies, but that is not where you can make big monies.
Okay, you did speak about Biocon, and yes, it has seen a fantastic rally. In fact, a lot of analysts have also missed on the Biocon rally. They caught it pretty late. I just want to understand if is this a good time to book profits? And I'm asking you this because a lot of people have asked us this question on Twitter. They want to know, or what is the next trigger that you see in this stock? Similarly, with Jubilant Life Sciences, that stock is making new or fresh lifetime highs. You are looking at buying this stock. What is your take on these two stocks?
Yeah, these two stocks maybe they have been the stocks which I invested in this year. I shifted from Biocon to Jubilant Life a few weeks ago. So that is not because I am bearish on Biocon. Biocon is somebody holding it. There's nothing wrong. It's a great company. It can create further wealth. But there can be small corrections and consolidations. It may not move some period of time. So you asked about booking profits. Booking profits that happens in trading. In value investing, nobody makes profit and loss. In value investing, you are supposed to grow your asset. That capital grows. So that's a style of investing. So you can't define how long you hold a stock. When should you book profit? So these are concepts in trading. But in value investing, it's very different. So from that perspective, I feel, but my style of operation, especially when I do for portfolio management, we sometimes take advantage of the medium-term opportunities in the market. That is one very good thing, to deliver superior returns. But holding stocks for a long period of time, sometimes if you are in the right stock and very good company with huge future potential, well managed, maybe somebody can hold stocks for 10 years and 20 years and maybe more. Why should you think of selling the stock? You own a company. When you own a company, that question of selling and booking profit doesn't happen. If you buy stocks with that kind of a spirit, you are the owner in that business. Grow with that business.
Well, Porinju, I have a question on HPCL, and just a few days ago, I had read one of your tweets on HPCL again, which has moved from 320 levels back in April 2014 to well over nearly 1200 rupees right now. And what I want to ask you is that, considering the prices where crude are at around $47-48 dollars a barrel, that's one aspect, and the other aspect is the structural and fundamental implications that these OMCs are going through, or the changes that these OMCs are going through. Can I have your view on the crude aspect as well as the fundamental aspect when it comes to the OMCs, and what is your view on something like an HPCL?
Yeah, I never used to invest in PSU stocks almost for a decade earlier. But one of the first stock which I bought in PMS at around 300 rupees was HPCL. The main reason I bought HPCL was there was a change of government envisaged that time, And these oil marketing companies were very unethically and unprofessionally managed by the government in those days. Because these are publicly listed and publicly held owned companies. Government cannot, manage this business in such a way they have the full power of decisions. They can give away all the profit of the company as subsidies. So that era was changing. That was the reason I started buying into HPCL. I tweeted that time at around 300 to investors. There is a change in the political management of these kind of businesses, so people could look at it. So I predicted a 4-digit price, and it happened recently. That doesn't mean somebody can book profit. I'm not thinking about that. These companies could be even much better valued going forward. The worth of these companies, if you see now HPCL, IOC, and BPCL kind of companies, just imagine in such a large country with 1.25 billion people living, and all of them are consumers of that. All over the country, they have their network of retail of petroleum products. Just imagine about the replacement cost of this thing, and the kind of it is amazing value. So these companies, if they are given full commercial freedom to operate, they can further increase their profits, and even shareholders can make more money.
Okay, that's correct. Porinju, one space that you really haven't spoken about is the NBFCs, because that is a hot sector right now. It's got a fancy of a lot of investors, but somehow I haven't come across you talking about NBFCs. And if you're bullish on India's growth story, I'm sure NBFCs is one space which has to grow or is likely to do well. But what is your take on that?
It is wrong, Shraddha. I used to talk about NPFC some time back. And now in the recent times, I am not talking about it because everybody else is talking.
Okay.
As simple as that. It's in the fancy. So I don't have a role to play, I normally pick a stock or suggest a stock when it's not in fancy, when everybody is feeling bad about it. So my style of stock picking is different.
Okay, definitely value investing and not growth investing. Okay, Agam has a follow-up question for you.
No, actually, considering you are not talking about those, but you have certainly been talking about realty stocks in the recent times. Anantraj and DLF, for example. What are your views here? And we actually have a bunch of viewers who also want to know your take on Anantraj specifically. So can you tell us a little more about that?
Yeah, this Anantraj and DLF, I have last year I was talking about this when the times were very bad. I first talked about them, when DLF came to around 100 levels and Anantraj was at around 30 levels. That's when I started talking about them. I found they were deep values, considering the assets they own and the price. It is priced in the market. So there was a huge gap. Especially Anantraj was available at something like 80-85% discount to their worth, going by the market cap. Of course, DLF had a very different kind of structure. And even that was very, very deep value at that point of time. But again, the sector is not in fancy. Even today, these stocks have moved up, in fact. Now, DLF has gone up by something like 50-60%. Anantraj, in fact, has doubled from their recent bottom. And but these are some segment of the real estate. But the other side, we have Godrej Properties, or there are great companies like Shobha Developers. We have well-managed companies. Even Mumbai-based, there are a few companies. What is that? One of them, I forgot the name. So investors have a choice of high-quality stocks in the business of developing real estate, and the other side, there are landowners. They own assets, lease model kind of thing, like DLF and Anantraj. But in both these, I find values. And going forward, somebody looking at long-term investing, investors should make a portfolio of, say, 3, 4, 5 stocks in the real estate sector. Because overexposure to one company can be a problem. Because there are the industry-specific challenges. Some of them are very highly leveraged, and some of them lacking the management quality. So these companies are all very, very different. So it is always better to keep some deep value stocks, with taking some risk on the management, on the balance sheet. On the other side, excellent companies like Shobha Developers and Godrej Properties, just for that business model, because India has a long way to go in that sector. A lot of Indians need to make home, and when the economy progresses, and there will be more demand for the home and the spaces. Right now, there is a glut. There is more supply than the demand. And I don't expect this situation to continue for a very long time. And in some pockets of the economy, some pockets of the country, there is too much, like Delhi, Gurgaon, and there's a problem. I think that activity is going on not very professionally. A lot of investors are taken for a ride, and there is a mess out of in the industry. So I think that's getting over. We should find consolidation, and some of these companies are really coming out as champions in the industry.
Porinju, again, there was tremendous opportunity in some of the sugar counters last year. This was when sugar prices were depressed, but now we're looking at some amount of consolidation. These sugar prices have run, and along with that, we've seen massive gains in some of these sugar counters as well. My question to you then is that, is there any juice left, or it won't be as much, and what are you doing with some of these sugar stocks?
Again, sugar stocks had a very big run. Stocks like Dwargesh, many of them 10 and 20 times some of these stocks. So it is again too much in fancy. I don't like to comment at these kind of levels. There can be some stocks with some more juice left, as you rightly told. But there's nothing wrong in avoiding that last few drops of the juice to be on the safer side. But there could be companies still worth holding. Some of the UP-based companies, their fundamentals are improving significantly. So there could be some, not a few drops, there can be more juice left in some of those companies.
Okay. Any new stocks really that are catching your attention right now? Because that's a question that we've received from a lot of viewers, a lot of tweets coming and asking just that question.
So the problem is, the small investors, the Twitter followers, or they all want every day some new stocks. So that's also not the right way to invest. I share some of my ideas, some of my thought process, maybe 2 or 3 in a month on Twitter. Sometimes I do. Now, a week ago, I was talking about Kumar Infra, because there was some major development, some negative development. What people thought, the stock came down from 220 to 105. So this is called, the irrational panic created by the trading community. That company, the news what came was, now one political party made an allegation that the Maharashtra government is doing a favor by giving them the BMC, the metro order. Actually, it was just a dirty political game where the company is involved in the news. But fundamentally, legally and technically, the company is issued the order for the metro. It was perfect. It was legal and it was all in place. There was no change in the fundamentals of the company, but just on that bad sentiment, the traders made the stock down by 50%. It was 105.6. Today it is 160. I think this is a great company. I hold the stocks, to be very frank. I was very busy buying it last 2 weeks. So I think I'm just telling an example, how the market panic, most of which are irrational, creates huge opportunity for the rational investors. So that is one thing people should be always aware. So don't go for too many stocks. There are a lot of people advising for stocks that may not be really genuine. So because of the new SEBI restrictions, which is very healthy, to avoid manipulations in the market, there are strict guidelines from SEBI. Even you suggest or advise about stocks, you need to have the research analyst registration. Of course, I can talk stocks. I think I'm exempted because of I being a portfolio manager. But basically, that awareness, anybody cannot talk any kind of stocks, and so a lot of small investors used to get carried away earlier. That is declining, which is a healthy sign. So even my advice to investors, more than looking at stocks, new stocks in action every day, look very soberly. Keep your eyes and ears open. Look at segment-wise, industry-wise, economy-wise, and watch the news. You're reading newspaper, watching the TV. So you will come to know. You'll come across with many companies, many stock ideas. Analyze them very soberly. How is this priced? How is its balance sheet? Today, a lot of people, I'm telling you, maybe 95% of the investing community or traders, they are really capable of analyzing the companies in a basic manner. But many of them are not taking that effort. They always want ready-made tips. That's also a bad, unhealthy trend. When you are capable, today after 12th standard also people can really explore companies, and things are very simple. And one very important thing, Shraddha and Agam, I will tell you. See, in today's world, getting information, research analysis is also not very, very interesting thing. I think it's an extinct activity. On a click of a mouse, you get every aspect of a company, every data of a company reported till today 4 o'clock of the last 10 years, 20, 30 years. So that is the kind of facility, the benefit today. And so anybody with some reasonable education and awareness and a willingness to learn, that's the most important aspect. I'm telling you, everybody is an analyst today. Everybody can explore things. You may keep your eyes and ears open and welcome ideas, analyze them. Don't just look for tips.
Right, okay. A very fair point taken, Porinju. Equity investing requires patience and thorough research, so everybody should keep that in mind. Next Twitter question that you're taking, Agam?
Oh, of course. This was actually also my question, Purinju. But you always said that one of your strengths is finding stocks at inflection point. And this is something that a lot of investors have been asking us on Twitter as to how would you go about finding these stocks? Are there any steps that you follow, or are there any points that you keep in mind when you consider a stock and you see, all right, this stock has the potential to move from here on. It's come out of its bad phase, and maybe from here on it'll look much better.
Yeah. Agam, now what you asked is basically, most of the amateur investors have this in mind. They feel there are some certain steps to identify a stock. To be very frank, it doesn't exist like that. There is no hard and fast rule and way of coming across a stock idea. Only thing I can tell is keep your eyes and ears open. Be humble, be learning. Because nobody is an expert in equities. You have to be humble and continuous learning it is. The market structure and the trading, everything go on changing. It's a very dynamic world. The fundamentals of companies are changing very fast. So that is also another major challenge. At the same time, it's very interesting. Some companies which were not good, they are coming into the league of good companies. So that is an inflection point. Some of the managements are changing for better. In some companies, the next generation is taking over. And maybe his father or uncle were very bad guys. They used to siphon off money. Now these guys, they were well educated. They are ethical. They are coming and taking over the company. So that's the inflection point. It's a turnaround. I call it a turnaround in the management. So there are different ways, and some companies have a problem of over leveraging. Some good times they went on over leveraging. Maybe it is a very good company, well managed company, but they have temporary problems. They may be reporting negative numbers today. Now investor has to see whether it has got a potential to turn around with regard to the balance sheet. Whether they can raise some, because there are fundamentals the other side, the working conditions are going excellent, but they have got a bad balance sheet. So how it goes? So one has to monitor that. Maybe they can raise funds and become comfortable on the balance sheet and create huge wealth. So what I'm telling, there are 1,000 ways of analyzing and looking at stocks. Don't get fixed on something.
Okay, actually, I have about 6 people who are asking me your view about TCI Logistics post this demerger. Do you have any views on this one?
Please come again.
That is TCI.
TCI, okay. Yeah. TCI became TCI Express today.
Yes.
The shareholder were getting one TCI Express for every 2 shares in TCI as they were holding. Today it has become TCI Express. I think the stock price is around 195. This is one of our large holding in PMS. We have been buying and it's doing well. And we have opted to continue, and we'll be getting the TCI Express shares soon. This is one of the largest companies in India in the logistics sector. I didn't buy it just for GST. See, in the last 1 year, 2 year, people feel you buy a logistics company for GST. Well, it's all wrong concept. See, even without GST, India needs logistics companies, and GST was something which was very sure to come for this economy. So it was only a question of time. So these are not the consideration for buying stocks. Now TCI, today it may be, I don't know what's the market cap today, at 195 without TCI Express. It's a very large, wealthy company. They want somebody explore the company, they have something like 1,000 branches, their own space in real estate. Just imagine. And of course, this was not very, very dynamically managed by Agarwals. Now I think they are improving. Even I was interacting with them once on a TV show. So this company has potential to create wealth for a very long period of time. You have to watch it. TCI Express is something more fancy today. That doesn't mean TCI otherwise is bad. I like both the companies.
Okay, fine. I'll come back to a very generic question. I just wanted to ask you, which are are there some of the stocks that really haven't, stock picks that haven't worked for you, and or probably you feel that you didn't buy them at the right valuation. So basically, I'm just trying to understand, if you could share some of your learnings, or so it can help some of the viewers, or probably how do you identify red flags so people don't get caught in the wrong companies. Any of your learnings that you could share?
Any of the
Learnings that you could share.
See, this is again, I remember many people used to ask me which institute I should learn, which books I should read. This learning in equities is something, again, there is no hard and fast rules. It's a very, because see, when you say equity comprises the whole economy of the country, all the companies and businesses in this economy. So it's a very, very dynamic kind of thing. And some people, some point of time, they create a knack, they generate a knack for doing it. It's again, I used to talk, common sense is a very important ingredient for that. You can do number crunching, and number crunching is today very easy, as I told earlier. Then mixing it with a common sense and the insights into the future of the company and the business. That's most important. How this company is going to perform, create wealth for you in the next 2, 3 or 5 years time or 10 years time. That insight, it is something everybody has to develop their own. Nobody can from outside can help you for that.
Okay, Porinju, again, another stock specific question. We have this question from Roshi Skaria, and he has a question about future consumer, the group, and I'm sure you've actually expressed some views recently on this counter as well. Can you tell us a little more about this one?
Yeah, this company, now the stock price is around 22 rupees. It's one of our core holding in PMS. Of course, we have been buying from 10 rupees a year ago. I was buying at 5 rupees also 2-3 years ago. This company I noticed because I found the business model in this company is futuristic. And I was buying this company when the perception about the group was not very high 2 years ago and 1 year ago. Now things are changing. And retail had an issue. Generally, the perception, many of the companies could not report numbers to the expectation of the shareholders in many of these companies. So that was a time I found Future Consumer Enterprises Limited, that is called FCEL, one of the Kishore Biyani Group companies, which owns the Nilgiris in South India, which I found very, very interesting. In fact, I looked at this company because of their deal to buy Nilgiris. And I found Nilgiris at around 310 crores they bought was a fantastic deal. It's a 110-year-old brand in South India, very much trusted. But it's only a small segment for this company. This company is a fully integrated food and FMCG company. It is making loss at the bottom line at this point of time. Even next year they may be making a loss. But they are building up a very important business for the future. They have the food parks. It's being set up. One food park is ready at Tumkur in Bangalore. Basically, the business model is they collect the agri products produced from the farmers at the bottom level, and they outsource other things, and they grade it and pack it, clean it, brand it, and sell it through their own network and other networks. So that's why I call it a fully integrated thing. The branding is also very important. Now I found them, buying some of or making arrangements with some of these stagnant European brands, and they are making very cost-effective kind of products. They have their own products, and it's a retail business also. And they may be making 1 or 2 more food parks to cover the whole of country. So, and they are projecting about 20,000 crores of business by 2021. And going by the way they are doing, I feel it is achievable in this country. Only in this country, I am telling you. See, we all are lucky to be in this country as equity investors. The kind of growth and visibility India is offering, no other country in the world is having it. Believe me. Of course, everybody knows about the Western country. Even you take a look at the other emerging markets or the Southeast Asian countries, India is an economy which is very special, and we are in a sweet spot. So this kind of businesses, can go a long way in the coming years. So we continue to hold FCEL, and we don't have any target for that.
Well, okay, Porinju, so I'm actually going to go back to your trading days back in, when you were here in the Lal Street itself. I honestly wanted to personally know about, one or two memories that you had from those days that you still carry forward, something that has influenced you as an investor from the memories that you had from those days. Can you tell us anything from that?
Memories, yeah, it was a great a period of time in my life. Since 1990 to 99, I was in Mumbai. I was a floor trader with Kotak to start my career in 1990. Then later part, I was with Parag Parikh. I was more involved in research and fund management. I came back to my hometown in 99. So that period, I think it was learning. It was a learning period for me. More than making money, of course, I started my career without any capital. I am from a lower middle class or a poor family, so I didn't have that kind of resources to invest. I could never be an investor that time. But that learning, do some trades, and but basically a badge holder I was, floor trader it's called on BSc. It was outcry system in those days. So it was that learning part was the big memory for me. And the trading ring, we used to spend time, and some of us, I was so privileged to be in those days with Ragesh Ranjanwala or Motilal Bhai, Dada Krishnan Damani, Chandrakant Sambat, Ramesh Damani. So it was fun in those days. We used to stand in a circle and we used to talk for hours sometimes, and then go out and do some trades. And a bit of value investment we used to discuss. The operator, in those days, it used to be the time of operators. The stocks, the ideas, the insider stories were the thing which we used to drive operators in those days. There was no transparency in the system. So it was a very imperfect market in those days. And people who really were shrewd and wanted to make money, it was a heaven to make money. So that's today markets are very different. You won't believe some new generation people today how market was functioning in 90s before the electronic trading system came in place. It was unbelievable, some kind of things. It was outcry and jobbing system. People used to two-way quote for hundreds of stocks, and there used to be 20%, 30% difference. Somebody's stock is 100 rupees. The jobber is telling you 100 buyer, 125 seller. So you have no option. You can buy it 125 or you can sell it 100 rupees. So that's the kind of market it used to be in the 90s.
There's been a big sea of change since then. Porinju, we've discussed a lot of equities. We've spoken about a lot of individual stocks, but it's a Friday today. We are getting into the weekend. We have the festive season that is going to start in India. So just one question that I want to ask you, and that's on jewelry. Gold is a very important part of the Indian savings and investment portfolio. I don't know, you have anything to say about gold?
I don't like gold. See, it has no fundamentals. I am a fundamental person. Maybe, if the price come down to 5,000 rupees per kilogram, I may have a look at that.
All right, Porinju, thank you so much for your time. It's been a long conversation, longer than we had expected. But thank you. We are very good insights, and Nifty at new highs in next 2-3 months. That's what Porinju is leaving us with as we get into the weekend. I really appreciate you joining us, Porinju. Thank you, and thank you all the viewers. We'll be back next Friday.